Good evening, guys. Ken at Tortoise Capital with the Nightly Strategy Podcast for September 29th, 2021. So let's get started in the usual way with the market health check. So we had an inside day today. And if we go back like 10 days, we had the horrible sell off to Z minus 4. Then a 5 or 6 day recovery that rewarded the channeling and the overreactions in the usual way. A hesitation doji day just short of the Bollinger Band mean, which you notice now has rolled over and the river is sloping downward. And the dragon made the turn here and is sloping steeply downward. And the price has gone from fall to winter, reached a Z minus 2 peak, bounced, then rejected at the edge of the dragon, and is now down and getting ready for a collapsing dragon below the RL10. So there's an automatic short price there at 435.50, and you can see that price has already violated below that. So you are authorized to be short as a collapsing dragon now, and your stop would reasonably be above the RL10 peak, which would be about a 1% stop, and you're in the money on that one still. And we're close to the 5% sell-off from the swing high. So here's the swing high, and then this gives us the 2.5% sell, and that's the 5% sell, which gets it down to 431.50, and we're within a hair's breadth of that. And if that should break, then we're also ready to break below a previous RL10, so that would be an additional collapsing dragon. The next stop would be below the 10-day, 30-day low, and if that breaks, we're that close to the Z3 extension. And could you get that kind of a move in one day? Yes, you could, because here's the size of a one-day move. So if it collapsed that far tomorrow, that would take us down through, just using symmetry, that would take us below, below 2 days ago low, the swing low, right there. Down through the 5% sell, the previous collapsing dragon, the 10-day, 30-day low, and then down to the Z3 excursion. So all that is within play on a single day. Not happy times. The PSAR is pointing down, the RL30 extension pointing down. Even the RL90 has rolled over. Which is that next longer term health of the trend. And so this is, I just want you to notice the power and the importance of those, that series of signals up here. The RL10 rolling over, summer turning to fall, crossing the dragon, re-entering the river, flipping the PSAR, crossing the Bollinger Band mean, leaving the river and turning to winter, then a low, a rebound which failed, and now getting ready to violate that again. The RL30 rolling over. Here's where the RL30 crossed the RL90, and that's like a RLCO on the next higher time frame. It kind of gives you what an RLCO P1 would look like on a weekly chart. So all of those indicators are roadmaps that are just simply documenting the decay of that trend. So pay attention to the roadsides when you drive. Excuse me. All right, let's get the the sectors. So we have the S&P was up a fraction at 0.17. Diamonds and the treasuries were up 0.17 and a quart and 0.25. Those were the two strongest sectors. Not much to choose from there. Tech was down 0.16. The Russell was down 0.21. The worst performer was emerging markets at minus 0.93. All right, let's take a look at the very few things that were available to the upside today. You had Brazil up 0.6, consumer staples up 0.9, the VIX up 1.46. So that's to me, XLP is the poster child for conservative equity exposure, with bonds and treasuries not really offering you much. XLP is populated with those companies that have positive cash flow in a mature business, paying dividends, and when you compare that to XLY, the consumer discretionary, that's sort of an indication of where the tipping point is. And so right now the defensive plays, staples versus discretionary, is tipping towards staples. Right. Only a couple symbols, individual targets that look good. Devon Energy was the best at 1.7, Apple 0.65, recovering from yesterday's selling. Tesla up 0.5% to 781. 800 is a critical round number it has to get through. Microsoft at 0.17. So that was equal to the market, but it outperformed tech, as we see down here. So Microsoft and Apple kind of working their way back into our good graces. So not much to choose from. The bump in the S&P was really just the index itself and just consumer staples, nothing else. All the other sectors underperforming. All right, so a great big cluster of sectors that underperformed here. You got wood, commercial real estate, blended commodities, consumer discretionary, finance. Agriculture and energy were flat. S&P tech, oil down a fraction. So lots of underlying weakness there. Oil exploration minus 0.33, materials minus 0.4, lumber, the other lumber minus 0.5, fangs and lithium minus 0.7, 0.8, Mexico minus 0.8. More pain and suffering here. Another cluster of sectors all down between 1.2 and 1.8. So that's clean energy, Ethereum, blockchain, precious metals, biotech, moonshots, ARC Genomics, the Bitcoin Trust. So very broad selling pressure here. ARC Innovation minus 2%, marijuana 2.8%, and then the blended large cap crypto minus 4.7%. So still not showing signs of recovering much from the adverse news out of China. Individual companies that really lagged today: Virgin Galactic minus 3.5%, Robinhood 3.3%, Cliff and U.S. Steel, the steelmakers down big. Squarespace Innovation, Coinbase Innovation down 2 and 2 3/4. PayPal, the disruptor in finance, minus 1.2%. John Deere minus 0.87%. Alcoa minus 0.78%. TX, the steel company, minus 0.7%. So broad-based weakness everywhere you look, and very little evidence of buying interest here. Still being rocked by the bad news in yields and the news of the Fed front-running their own pumping. I mean, it's not like those guys aren't already as rich as God. They have to also cheat. God bless America. And they act like they're on Seinfeld. Oh, we shouldn't have done that. Outrageous. Well, that's what you get when you have a private corporation running monetary policy and supporting the ownership class. I mean, that's the least surprising thing of all. And they were in compliance with the law, yeah, published by Congress, who benefits from the same kind of suckers game in national corporate finance. That to me is the argument against fundamental trading. Can you believe anything that's printed through official channels? That I just don't see the edge that's available there. I think that's a sucker's game. All right, let's take a look at a couple of the trade patterns today from the gang. They're doing great work. This one looks like Luke, and he's trading Cliff. Now he's gone back to trying the ticks. We saw yesterday, I think, or maybe, I think yesterday, his 2-minute work on the Dow Jones was very orderly, and it looked like he was going to embrace that. So just keeping it fresh. He's back to trading Cliff on the 300 ticks and does very well. Works out 8.7R today. So here's the Z3 pinch from yesterday. Let me get my annotation here. Sorry. It's my daughter's birthday, and we had chicken wings. So I'm enjoying that. So we've got the Z3 pinch at yesterday's close. So he sets up a little risk box here. It violates, and that's essentially a collapsing dragon with a stop just above the hump of the RL10. Reasonable, and he gets that entry. There's this little rebound, and this could be second entry. I think that means he saw the signal but didn't take it, and he gets the cover here at the Bollinger Band mean. I think that's still reasonable. Maybe we should have this one here. After such an excursion and then a big recovery and through the dragon, I wouldn't mind seeing you take this instead of this. I'd be okay with that. Then this looks like a stop and reverse. Good micro loss there. Good effort for stop and reverse. Good exit. Great re-entry. Now he's getting onto to the right side of the fractionals right now. Gives this one a try. That's perfectly reasonable because now this thing has put in a low and another low and has failed to fail further. And now you get the PSAR flip, and there's some effort on the upside. So I like that entry. I love this exit, and I love this stop and reverse, and a second position, and a third position, and a reasonable stop for that's about 3.5 on that one. Well done. Beautiful stop and reverse. Second position, third position on the VWAP cross. I want to see this exit instead of here. I want to see that up in here, which is the 1, 2, 3 exit, and crush that one for, that would be 5.3 on that one. And it's even better if you get that. Because remember, you got 3 positions in. So every little inaccuracy in here is multiplied by 3 and undercutting your gains. Right? So like this little 0.3 win here, that little fraction, that would be 0.6 if you took it here, which means that what you gave back was 0.3, but that's 0.3 on 3 different trades, and that's 0.9R. So let's respect that and tighten up our shot group. I like this stop and reverse on a breakout below the Bollinger Band mean, and nice recovery going into the close. Pretty good day at work. All right, so here we got EWZ. And let me see. whose chart is this? We can give praise. This is Matthew. This is a nice Kata 2, and collapsing dragon. So you have a high, a low, a lower high. So we could actually get this entry here maybe one bar earlier. That's still pretty good. I like the scratch. I'd have been tempted on this one to go long because you have a low, a high, a higher low than the RLXT. That would be legitimately the Kata 2. When that doesn't pay off, I think you could take that PSAR flip and get this short here instead of waiting for the cross of the VWAP. But still, I like the cross of the VWAP because now you think this thing has made a new low of the day and it's going to go back to yesterday's close. But it doesn't, so he gets a nice scratch, a nice re-entry, nice micro. Both of those are well taken. And then I want you to notice the Z3 pinch. And now here is the place where that has gotten the tightest pinch of all. So when I take that Z3 across here, I want to get short either here or here, and then that's going to give you this move, which gave you the move that you were entitled to believe in over here. So when I see that formation and I see the RL90 or the RL270 rolling over, and it's rejecting the VWAP, those are the high payoffs right there. This is a reasonable entry on the long side, good scratch. I'd like to see you try this one here because you got a low, a high, a higher low in the RLXD. We might have gotten some of that, but still, that's a pretty good piece. There was only, 1 and 2 reasonable moves that would have paid for the day, but we got to keep firing. And I like the discipline on the stops, and I like that you're continuing to go for it. Getting to the that's evidence of getting to the zero state. So we like that. Like it when we see it. All right, this is in Devon Energy, and that was outperforming the broad market. So here was the pinch. This is legitimately a potential hybrid frog with a stop probably right about there. And then I'd end up probably taking my exit right in here. So you might have made a little fraction. Now you have a low and a higher low. Excuse me. This would have been a very tempting Kata 2. If this had gotten you out, then this Kata 2 should have gotten you back in. It waits for the Z3 pinch breakout, and it's crossing the RL270. I like the stop. I like that you didn't let this one go negative. I love the stop and reverse, and this is a beautiful 1-2-3 exit here. So very nicely played through here. And then he made the effort to get this trade, but didn't get filled. There's your PSAR flip. Here's your low, here's your higher low, and there's your RLXD. That makes this either a Kata 2, or you could say, hey, there's your harsh sell-off. So this could also be an SSC. When you get that combination, that's still pretty good. So an entry here, I expect you probably would have taken that trade right there. And then there just wasn't much left in the rest of the day. So I think pretty good structure. This is a deliberate choice to wait for the Z3 pinch breakout. I don't disagree with that. Just want you to notice there were a couple opportunities in there that might have also been part of that trade, which ends up looking tradable, right? So good work across the board, both guys. Oops, before we get the daily report loaded up, I do want to show. I had a good conference call with Van today. We were working on a redesign of the VTI curriculum, and so kind of the things we looked at were this idea that he was interested in adopting more of a university style approach, and with tracks and curriculum like that. So what I suggested was that, in my opinion, first of all, it's a good idea. He identified a bunch of kind of their basic courses, which I would look at as basic high school financial literacy or basic training. That was like infinite wealth, how big money works, and some elements of psychology. Then there was some of a stripped down version of peak performance that would start addressing psychology, emotions, personal learning styles, and then developing the skills and management techniques for self-regulation. That's kind of psychology 101 in the first half maybe of the peak performance course. And then some basics about market introduction and overviews, essentially like a review of the Perry Kaufman work on the Encyclopedia of Trading Systems, just to get a broad view of the things that are available and the kinds of methods that are seen and the basics of systems and the types of systems, and then the idea of the system design course, and then briefing a handful of existing reasonable mechanical signals or systems like my home study course for the core and for the mechanical swing systems. And in my view, that gives you essentially an undergraduate degree in trading. You get foundations, psychology, market operations, and then a reasonable set of robust systems that should give you choices. Then, in my view, everything after that is kind of like a grad school approach. And I think that Chuck Whitman's work and Gabriel's work and my work and that of the Reed's traders too, all of those are comprehensive tracks that are professional approaches to a body of knowledge that gives you a combination of strategy, market assessment, trading systems that are internally consistent, mechanical and discretionary processes, the whole package. And so each one of those, to me, represents something like a broad-based approach at the master's level, and where it makes sense, you figure out which one of those resonates with you, then that gives you a curriculum to work with. In my view, the next part of graduate school there is the Super Trader program, which I consider to be a doctorate level work, because you're not just studying an external body of knowledge, you are internalizing and rewiring your own brain. You're internalizing the teachings, reorienting your life and your brain. And that's essentially what terminal degree holders do when they go through PhDs. And then I think some folks who take that Super Trader course that have internalized those things could move on to postdoctoral work where they're doing applied research on their own personal systems with the idea of turning those into comprehensive bodies of knowledge like Chuck and Gabriel have done, and produce actual curriculum that can be taught to others. So to me, that is sort of a reasonable approach to a university-style curriculum, and Ivan's making some notes about how to align courseware and then build out a various learning paths that could take people through there. And I talked about the possibility of developing some additional short courses that people might be interested, like elective programs. So I would expect some changes in style, maybe, or approach or organization over at the Tharp Institute, and it all looks good and interesting to me. So I wanted to share those insights with you, for those of you that work a lot with him. His health much improved once he got back to Carolina. He was looking a little sickly there, and he's feeling much better. He was very energetic and as excited about updating materials as I've seen him in the last 10 years. So it's a good thing to see. All right, let's shift now to the daily report. Let's see. Review shapes. All right, let's go to excuse me. Go to dashboard number 1. So we are still bullish volatile, still in the low end of neutral on the NDXs. We're starting to stress test the bull market here as we're in bullish red. The ADX is showing pretty close to a strong bullish downward, or a bearish downward trend, I should say. As soon as that gets above 25, then that's going to trigger the strong trend rating on the bullish, or bearish side, I should say. Sorry. So ATR percentage has doubled in the last 10 days, so we're in volatile conditions. The risk Z has been our reliable alert to weakness to the downside, and it's really stress testing this. It's not going to take much for that to collapse. We have a few more signals now in the overreaction and channeling. We remember yesterday EFA and IEV were the weak ones, and now tech has joined the play to the downside. So look out below is what I'm warning there. Handful of dojis today. Still plenty of auto framers that are testing out better than 4 to 1. That's important to know. In the ETFs, lots of dojis and channeling and overreactions. Plenty of auto framers showing a weakness here, and no other patterns per se. The auto framers giving you your standard mechanical entries for swing trading 1 day at a time, so I like looking at anything better than 2 to 1. And I'm going to continue to emphasize the indexes, so EFA stands out to me, because if that thing fails, then that's going to be a high payoff because of its weakness. EEP and IEV in the globals, also better than 4 to 1. And I like the fact that the S&P is kind of in here at 3.4. It tells you that there's potential for a big move in either direction shaping up. So let's have our risk measured and powder dry. Disney, Pfizer, and Cisco with relatively low small ranges today could be ready for a 1 day pop. The winter is just dominating the scoreboard, as you can see. And still mostly weakness today, with the exception of Merck. And then you can just see how bad all the red is over the last 30 days, and how the even the strong sectors, energy, finance, all continuing to suffer too. So no strength in sight. Won't take much for this thing to collapse. Percent stretches are really in the red line area there. It's 3 standard deviation below the long-term average. The slope of the S&P, the slope of the RL30, that's that market health check indicator there. This is where it rolled over and where it crossed the long-term average, where it went Z-1. It went negative here, broke Z-2 here, and is now 3 sigma down. And that's what it looks like over the last 30 days. And over the last 6 months, you can see just how bad that slope is compared even to the previous sell-offs, which got down to 0 but stayed positive. And when this broke, that's a hint right there. Volatility increasing here, and that's why we're in volatile conditions right there. No joy in Mudville today. Okay. All right. That's everything I got for us today. Let's get this published and posted and be ready for tomorrow.